Good morning and a warm welcome. Sage here for Kalkine TV, reporting to you live from Sydney. And you are watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from yesterday, starting with the US market. And soaring energy prices retreated and stocks on Wall Street rebounded on Wednesday after the top US Senate Republican backed an extension of the US debt ceiling and Russia calmed volatile natural gas markets in Europe. MSCI's All-Country World Index paired losses to trade 0.22% lower. And benchmark US indices closed higher on Wednesday, October 6th, as stocks recovered following a weak start to the trading day and bullish sentiments rose after lawmakers sealed a debt ceiling deal. The S&P 500 was up 0.41% and the Dow Jones rose 0.30%. The Nasdaq Composite rose 0.47%, while the small cap Russell 2000 was down 0.60%. Investors welcomed a key debt deal between Democratic and Republican lawmakers that prevented a potential government default. But still, rising oil and gas prices that could increase inflationary pressure weighed on the investors' minds. And as a result, retail traders kept away from risky bets. Utility, technologies and consumer segments were the top performers on the S&P 500. Energy and basic materials sectors trailed, and 7 of the 11 index segments stayed in the positive territory. Looking now at the futures and commodities market. Gold futures were up 0.17%, silver increased by 0.24%, while copper fell 0.43%. And Brent oil futures decreased by 2.12% and WTI crude was down 2.42%. Moving on now to the bond market, and the 30-year Treasury bond yields were down 0.73%, while the 10-year bond yields fell 0.22%. US dollar futures index increased by 0.47%. And now it's time for a small break, but do stay tuned as I'll be back with the Asian and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back. I'm Sage and you're watching the Global Markets Roundup show. Automakers, retail and travel shares fell more than 2.5% on Wednesday, leading declines across all major sectors in Europe as soaring oil and gas prices intensified concerns inflation will dent economic growth. The Pan-European Stock 600 index fell 1%, giving back almost all of the gains made on Tuesday. Eurozone bond yields rose as a government bond sell-off driven by concerns about inflation lingered on Wednesday, although yields gave up much of their earlier rise as the US Treasury yields fell by late London trade. The London markets traded in the red zone after the release of the UK construction PMI data. And according to the recently available data from IHS Markit, CIPS, the UK construction sector got hit by a shortage of raw materials and staff, and PMI stood at 52.6 during September 2021, down from 55.20 recorded in August. Tesco shares climbed by about 5.95% after the company had announced a £500 million share buyback and raised the full-year profit guidance. Moreover, the company had declared an interim dividend in line with the prior year. Germany's 10-year government bond yield, the benchmark of the bloc, rose as much as 4 BPS and hit its highest since the end of June at 0.147%. It edged lower in the late trade following the US Treasury's lower after US employment data showed US private payrolls increased more than expected in September and was up less than a basis point at 0.18%. The Pan-European Stock 600 index fell 1%, giving back almost all of the gains made on Tuesday. And Japan's Nikkei reversed course on Wednesday to close at a more than 6-week low, dragged down by concerns over higher interest rates, China's slowdown and modest approval ratings for the country's new Prime Minister. The Nikkei share average fell 1.05% to its lowest level since August 23rd. The index, which gained as much as 1.4% earlier in the session, closed in the red for an 8th straight session. South Korean shares on Wednesday closed at their lowest level since late December on worries about surging US Treasury yields while investors await the US payrolls data later in the week. The Kospi ended 1.82% lower to its lowest close since December 30th, 2020. It reversed early gains of as much as 1.06% that tracked a rebound on Wall Street overnight. The Australian shares are set to rise on Thursday, tracking mildly positive cues from Wall Street, with soaring energy prices likely benefiting the local energy firms. And investors are also positive as they highly expect US Congress to reach a deal to avert a government debt default. The ASX 200 fell 0.6% on Wednesday, and the major ASX-listed companies scheduled to pay latest dividends to their shareholders include Breville Group, InvoCare, South 32, Super Retail Group, Wesfarmers. The dollar rose toward a one-year high touched last week as inflation concerns fueled by surging energy prices and the outlook for rising rates knocked investors' appetite for riskier assets. And the dollar index rose 0.228%. The euro was down 0.34%. Yen traded down 0.04%. And crude oil prices fell following news reports that US stockpiles have increased. Oil prices slipped nearly 2% after hitting multi-year highs. Gold prices edged higher following a silent retreat in the US bond yields, boosting the safe haven asset. And thank you for your company on that report. That is all for now. Do keep watching Kalkine TV for more market updates. And this is Sage signing off.